So, bro, welcome to this video. So, I'll be going through like the file I sent you, which contains like the system I trade, how I trade, and everything. So, in this video, I'll be giving you like live examples and more explanation for that strategy actually. So, a few things that we actually cover in these videos. So I will actually make like 3 videos to cover a few topics, or 3, or maybe I think I'll just do 2 videos, and then for the last one I will send you. I will send you some very good YouTube videos to watch on that regards. That's actually for okay. Let me write them down here. So the first thing we're going to look at is the actual trading system, or let me say trading strategy. Not strategy, it's trading system, trading strategy. Okay, and then we look at risk management. Trading psychology. Okay, so for trading system and risk management, I will be doing the teaching here, and then trading psychology, I will give you videos of I think good trading psychology teachers for you to go and watch, because I can't really explain much on this. Okay, so you actually need a trading psychology professional to give more insights on this particular topic. Right, so I'll just make this bigger and leave it here. Okay, so these are the 3 things we are going to be looking at in this particular, let's say, advanced strategy or advanced trading method of trading system. Okay, so from the file I shared with you is actually the file here. So I'll just as I'm going through the write-ups in this file, I will be explaining using the charts as well. Okay, so here I say that my trading system or trading strategy is based off daily and weekly time frame areas of interest. Okay, so what are areas of interest? Areas of interest is either you call it area of interest or points of interest. Okay, so these are actually points in price where you are looking at, or you are waiting for price to come in to. Okay, if price come into this area or this level that you have marked out, you wait for price to give you 1 or 2 confirmations at that area before you can either buy or sell. Okay, so that's what area of in this area of interest is. You can actually call it AOI, that's area of interest, or POI, point of interest. Okay, it's still the same thing. In case if you hear it from different traders, some use AOI, some use POI. Okay, so what are these areas of interest? These areas of interest, you're looking at weekly and daily highs and lows. Okay, weekly and daily highs and lows are effective key levels where I look for price, where I look to trade for trading opportunities. Okay, to consider any of these levels as key points of interest, they must meet certain criteria, including, so these are the criteria I look at those particular candle to meet before I can take them as my my POI. So let's see, I said here weekly and daily highs and lows. Okay, because my whole system, like the whole system is majorly based of this daily and weekly point of interest. So if you can go, before I can go into this in details, let's just go to the charts so you can look at what I mean by highs and low, like weekly, daily highs and lows, weekly or daily highs and lows. Okay, so what I'm looking at on the daily time frame or on the weekly time frame, I'm actually on the daily time frame. Okay, this is the weekly time frame, so let's go to the daily time frame. What I'm actually looking at on the daily time frame at the closure, okay, is the daily high and daily low. Remember what I told you when we studied these candlesticks? Okay, so this candle here, if I'm on the daily time frame, this candle here is 1 day. This day is another day, this day is another day. So as this day has closed and then I'm looking to trade tomorrow, okay, what I'm looking at is the high of this day. I'll mark that day, the high of that day out, okay, and also mark out the low of that day. So this high and this low are important areas in price that I'm going to be looking out for tomorrow. Okay, hope that makes sense. So for this particular day now, okay, today is Thursday, because I think I'm recording this around 12 p.m. or so. So let's say this particular day, which is Wednesday, before this candle opened on Tuesday night, I've already come to the chart and I mark out this high here. This is okay, this is Tuesday. Mark out the high of Tuesday and also the low of Tuesday. So this high of Tuesday and low of Tuesday are areas of interest where I'm looking to either buy or sell. Okay, I hope that is very, very simple and very clear. All right, so I'm going back to this again. Okay, going back to this. So for me to consider those areas, okay, so for daily, for previous days or previous weeks highs and low, that one is actually they're actually stable. Okay, I don't change that. So every single day, after every single daily close, I mark out the high and low of that daily close and intend to look at how price does around that area for the next day. Okay, so then it's not only the previous day's high and low or previous week's high and low that I look at to actually take a trade from. Okay, so I also look at other daily areas of interest aside from the highs and lows. Okay, so to consider other areas of interest, because for the highs and low of the previous day, that is static, it doesn't change. I must mark out the highs and lows of the previous day. Okay, but then to consider other areas, because there are other certain factors in that can show up in the daily time frame or in the weekly time frame, that area becomes a valid area of interest or point of interest. Okay, so to consider any of those levels, I'm looking for any of these four bullet points I listed there. So previous day and previous week's high and low, which loses validity once they are broken. Okay, once they are cleared. Okay, so this is just for the previous day's high and low. So once, let's say for example, we have this high here, we have this high from Tuesday. Okay, so and then on Wednesday, price opens and trades above this high and then close at these areas. So after price have closed at this area on Wednesday and we have Thursday coming in, this level is no longer valid. Okay, this high is no longer valid. So I take that level off and put it at this high. So this high and this low are now valid. Okay, but then there are some factors that can make this high valid after the following day have closed. Okay, so we are still going to look at that. Okay, so here is the previous day's high and low, which I mark out. So once they are broken and price closes above, they lose their validity. They are no longer valid to me again. So the next thing I look at is highly resistive or supportive areas remaining interesting after being broken, as price may retest them before continuation. Okay, so these are actually areas of support or resistance. So if I don't know if I think I've talked about support and resistance in our previous lessons. Okay, so I look at areas in price or daily highs and lows which are supportive to price, to previous day, to the following day's price action, or also resistive to the following day's price action. Okay, so but once these levels are broken, they still remain intact, because there's if you have an area of resistance or area of support that has been broken, if an area of support breaks, price is going to go down, and let's say 90% of the time price is going to come back to that area, that support area that is broke, and then use it as resistance to continue down. Okay, so what do I mean by this? If I can go back to my chart, so let's say for example, where I'm looking at okay, let's use this high as an example. Okay, so here you can see you have this high. This high is Thursday, so Thursday the 24th of October. So before Friday opened, I'll mark out this high and also mark out this low. So now you can see what happens on Friday. The price tried to go above the high of Thursday, but it failed and came back and closed below the high of Friday. So this rejection here means that this area is an area of resistance. Okay, remember what I told you about support and resistance? That resistance is like a ceiling that blocks price from going up, while support is like a floor that blocks price from going lower. Okay, so now you can see this area is a resistive area of price, right? So with this thing happening now, with price spiking above this area and closing below, this particular high now is still valid until it is broken. So you can see now that here now price have broken this high, it have broken this high and it have closed above. Okay, it have broken and closed above. So this high now is no longer what? It's no longer valid based off of the first rule I look at. But then due to the fact that you see this high, we had this high, and then we have resistance on that high, and price closed below, and later price broke through that resistance. Okay, we can still leave this level here. Okay, we can still leave this thing here. What do we expect that price can do is for price to maybe come down, maybe as price is said in this particular day or next day or a few days later, for price to what? Come down to this level and use it as support. Okay, retest this level and then continue to go up. Okay, so this level here on Euro USD, okay, because I'm using Euro USD to give this example, so this level is still valid, right? So I'm going to, if I'm trading this, I'm going to leave this level on this chart and wait to see price comes back to this level and see if it's going to give me any entry to either buy or sell. But once price, let's say once price comes back here, taps this thing, tap this level and start going up, this level is no longer valid because price have used it. Or if price comes back to this level and breaks it and close below, I'll still remove the level because price has already done its job here. It's broken it and used it as support, or it doesn't use it as support, so just continue going down. So once price comes back to this level and does anything at this level, the level is no longer valid, right? Okay, so I believe that one is actually clear. So another example here is this low. So you can see Friday. Okay, you can see Friday we had this low on Friday. Okay, and then Monday came in. Monday couldn't close below that low. Okay, couldn't close below that low. It stayed above that low, and then on Tuesday we still spiked below that low again. Spiked through it, came out, and then Wednesday continued. So this low here is still active. So I'm expecting that when price, anytime price gets back to this low, it's going to be an interesting area to look for either buy or sell. So price can come back to this low and retest this low and still go up. Okay, you can still spike through this low as it did here and here, or price can come to that low, take this low out and retest and continue going down. Okay, also because this low has held price once, twice, if price later come back to this low and breaks and closes below this low, okay, so if price comes back and break and close below this low, let's say today is Thursday, Friday, let's say by next week Monday price comes down and then you have a break of this low and price on Monday closes below here, closes below this level. Okay, it's closing below this level. I'm going to look for price to come back maybe on Tuesday or Wednesday or Thursday to retest this level here and continue down, or for price to come back to this level and keep going up. So once price breaks this level, because this level is not broken yet, it's still holding strong. Once price breaks this level, and comes back to this level to either retest or break back above and continue, then this level will become invalid. Okay, so but for now it's valid, right? So let me see if I can give you an example from the chart here. So let me look at a few price action where it's actually happened, because it doesn't happen that often. Okay, it doesn't happen that often. So okay, yes, this high here, so you can see this high. Okay, that high didn't work, sorry. If I can find another place. Come on. So okay, let's use this one. Okay, let's use this one here, or you can use this one here. Okay, because that's the first one. Okay, so yeah, this one. Right, so you can see we had these daily highs. This daily high which came in on Thursday, and then Friday we spiked through that high, closed below. So that high now still remains intact. Okay, so then what happened is that we had Monday, Tuesday, Wednesday, Thursday, Friday, we had the break of that high. Okay, so another thing you can notice is that we had after price made this high, had another high here which came in on Monday. Okay, so if you look at this high on Monday, the high of the candle of Tuesday spiked through that high, close below, and then Wednesday, Thursday, from Friday, the price broke through both this high and that high, right? So as price broke through, it took Monday, Tuesday, Wednesday, it came back and retested this one, okay, and then Thursday retested the second one. So it's like both of them were retested. So price retested, and then price continued going higher. Okay, so until our price have retested this area, this level and this level are still valid until price have retested it and moved away. So once price have retested them and moved away, they are no longer valid to us. Okay, so you can see even though they are not valid, you can see price came back here again before it broke, and then use it as resistance before continuing down. Okay, but once this thing has happened, so break, come back, retest, continuation, this level is no longer valid. Okay, so let's take that off and take this one off as well. So I think I saw another level. Okay, I saw another level. Okay, yeah, so another level here is this one. So you can see this high. Okay, the price made that high, or should I use this one? There's a couple of highs here. Okay, so let me just use this one. So price made this high and went slower, and you can see that price came back, tapped into that high again and rejected. Okay, so tap and rejection, and then it broke that high, and it broke this high on Tuesday. So it took Wednesday, Thursday, Friday, Saturday, Sunday, okay, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday. So it almost took like 2 weeks for price to come back to this level. Okay, so you can see this level, price came back because this level is actually resistance. Okay, so you can see we had the high, and then we have resistance above the high. So then we have break, and took a long time before price came back to this resistance. I use this as support. Okay, use this as support, and then it continued going higher, right? So another one here is, let's say, this high. So I use this high because it's a shallow break. So it's price almost close at this high. So I'll use this high. I'll use that high because price closed very close to it. So this is not like a major break. And then you can see the following day we spiked above that high, closed, rejected the high, and had a big drop. Okay, so a big drop on that side. So now you can see price came back up, rejected the high again, broke through that high, came back, retest, used this as support here, and went up before we had this sudden break. Okay, sudden breakdown in price. So now once price has retested this thing and continue going up, that level is no longer valid. So a valid level is going to be maybe this one, which had the rejection, and then we have the break. And price had to come back to this height to use it as resistance, because this is support. Okay, this support is trying to this low is trying to stop price from going lower. So this support, and then price broke through support, is going to come back and use it and turn into resistance. So support broken will always turn into what? Resistance. Okay, if support breaks, if you have support and it breaks and price come back to it, it can either turn into resistance or just break above it and continue higher. So you can see that price didn't actually come back to this level, and what happened is it came back to it here and then broke that level. So once price breaks and close above this thing, it's no longer valid, they take it out, right? So I believe this is clear, right? So let me remove this, go back. So I'll also remove this one as well. So going back to Notion, so and then another point we have is key reversal order blocks serving as interesting points, right? So let's check out what this means. Okay, so key reversal order block. So what is an order block? Right, so this is actually one you should actually write. You should actually write this one down, what an order block is. So let's say, for example, we have price going down, and then all of a sudden you see a blue candle that goes up. Okay, so let's say you're using up you're using blue for up candles and you're using black for down candles, and you see a consecutive down candle. It should be more than one. So if you have this candle, let's say for example you have this blue candle and then you have black candle, and then the next one is blue candle up, so there's nothing there. But then let's say you see black candle 1, 2, 3, and then you see this reversal. Okay, this blue candle reversal, you have another block there. Okay, you have another block. So this candle now becomes an order block. So what does order block mean? So let's say for example that price is going down. Okay, price is going down like it's doing here. 1, 2, 3 is going down, and then all of a sudden you see price change direction here. So for price to go from bearish, because it's bearish, this is going down, is bearish. As it's going down, is bearish. For it to change from going bearish to going bullish, that means a lot of banks or institutions that can move the market started buying. They started adding buy. They started scaling in their buy orders on this particular candle. Okay, they started buying on this candle to have this candle reverse. Okay, so with that being said, there is money around this candle, this particular candle. There is money in this candle, so it's expected that when price comes back to certain areas in this candle, there is going to be reaction, right? So what areas are we going to be looking at in this candle? Are we going to be looking at the low or the highs or what? Okay, so what we are going to be looking at for this candle is the closure of this candle, where price closed on this candle, which is here. Okay, closure on this candle, and also we are looking at the previous candle's high before the last candle. So this here, we're looking at this and this. So these two areas, this one and this one, are very, 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 very interesting areas of price, which you are going to be looking to do business in. You're going to be looking to sell from this area or buy from this area. Okay, sell from this area or buy from this area, and also either sell from this area or buy from this area. So what you can see is that, let's say for example, you can see this low now. Okay, this low before this not this low, sorry, this closure before this candle reversed. You can see how price on this thing happened on Wednesday the previous week. You can see how price on Monday the following week came back. Look at how price tested that low, this low. Look at how price tested this low. Like it's very very accurate. Like this is pinpoint accuracy here. Look at how price tested this low and then it's reversed. Okay, it tested this low and it's reversed, and also it spiked through that low also and here and reversed. So we are looking for price action to tell us that price is going to buy from this low or sell from this not low, sorry, it's going to buy from this area of interest or it's going to sell from this area of interest. And we're also looking for price to tell us if it's going to buy from this area of interest or it's going to sell from this area of interest, right? So let's look at another area where this thing happens. So you can see here as well, we have down candle, down candle, down candle, down candle, and then all of a sudden a bullish candle. Okay, so this is still the same thing. This low here and this closure here are our other block where we are looking to trade on this particular day. Okay, so on this particular day we are looking to trade this other block. So once, if this happens, okay, when does this thing get invalidated? So let's say for example we have this happen and then we have this blue candle which makes this area valid. So once the next day comes in and price trades through this level, let's say it comes down and trades through this level and close around here, this one is no longer valid because I've done this job. Okay, is that telling you, it could either tell you to sell from here or to buy from here, or this one tell you to sell from here or to buy from here. So let's say for example this candle closes around here and I've already traded down through this one. This one is no longer valid, but then this one is valid until price does something around that area. So you can see that price comes down, takes that level out. So once it takes it out and close below it, this thing is no longer valid anymore, right? Or yeah, although you can see price came back to that level, it's no longer valid. All right. So if you can find another example, I'm looking for another example here. Another example, I would have said this one, but this candle is still small. So you need a pronounced candle. Okay, you need a pronounced candle. So this candle is very small. It doesn't show that a lot of buying came in here. Okay, it needs to tell you that a lot of buying. It needs to be sure. The candle needs to tell you that yes, a lot of buying came in. So you can see this one, you have down, 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 and then the following candle. Look at this. Look at how big this candle is. So this one, this high here, and this closure here are important. So if I can mark those ones out here and here, right? So what you can see is that price later came back to that level. You can see the reaction for that level before it's finally broke. Okay, it finally broke that level. So until price breaks and closes below any of these levels is still valid. So we let's say for example we have this price come in and reject this level. Okay, you have this rejection and close above this area. This level is still valid until you have this price break and close below this and this. So once price closes below those two levels, they are no longer valid to us, so we delete them, right? So if I can find another example, yeah, so okay, here we have bullish candle, and then we have a bearish candle, which makes this another block. Okay, another block candle. So this here and this high here as well. So on this, from this day, we are looking to either sell from this high or buy from this high. We are looking to either buy from this high or also sell from this high. So you can see what happened on this day. We have a spike through that level, and then we have a spike through this level, and then a closure above this one. So now once price closed above this one is no longer valid. We delete that. but then this one is still valid because price is still holding its ground. This level is still holding its ground, so it's held here. Price came back through, so you can be looking for buys here as well. So let's see here, for example, remember I told you about marking out the daily highs and lows as well of the previous day. So if you are, let's say you see this thing and you're marking out this thing, you're also making sure you're marking out the previous day's high and low. So for example, this thing happened here, and then you have the bearish candle which confirmed this as another block. For you to trade this particular day, you also have to mark out this low and this high, okay, which are daily highs and low. And also you have to mark out this high as well, because you have this high serving as what? Resistance, because price traded above this high. So for this particular day, for you to trade this particular day, you're going to be marking out this one, okay, because of this, because of it meant this high, and then price rejected that and still stayed below this thing. So this is a resistance point. And also you're going to mark out this daily high here, okay, because you're going to be trading this day. So the high and low of the previous day are still important, okay. So this is how your markups, if I can move this thing back to this day, okay, yeah. So you want to trade this particular day, this is how your markup is going to be. You're going to mark up this high. Why? Because this particular daily candle traded above that high but couldn't stay above that high, so this is now resistance. And you're going to mark out this one. Why? Because you have a continuation here, you have a bullish, and then you have a bearish. So this is an order block candle. So to consider an order block candle, you have this, and then you have this. So you have this for the other block. You have this particular high because of what? Resistive area, and then you have this high because of daily high and daily low. That is essential for you to be trading the next day. So the next day, what happens? You can see that what happened, the price spiked through all these levels and still closed below. Also spiked through this lower level and still closed above. So price is still trading within this whole area. And then the next day, what happened? You can see price spiked through this low. Okay, price spiked through this low, this level, and also this level. Okay, so for trading of this particular day, you'll be marking out the low of this day, this particular day here, and also the high of that day, right? Because you're looking at every single day before you trade, you have to mark out the previous day's high and low, right? So you have to mark those two out as well, this low and that high. So let's just leave at this high because it's too far. So now what price did is that price spiked through this, and then closed above this, right? So once price now closes above these three levels, this other block here is no longer valid, okay. And then remember what I told you about areas of resistance turning support. So which one now? Why? Because we have this high, we have resistance, and then we have this high, we also have resistance here. So which one are we going to leave and which one are we going to take? So we are going to leave this one. Why? Because this is the initial one. Okay, this is the initial high resistance point. So we have price spiked through that, and then it spiked through that again. So we remove this one. Okay, we're going to remove this one because this one is still holding. Okay, so we remove that. And what we're expecting is that price will come down to this level and either tell us if it's going to continue higher or it's going to break this level and continue lower. But then these whole levels below here are still useful. Why? Because price haven't broken any of these things. So you can still ask, okay, look at where this body is. It's broken this. No, this is actually a bullish candle, and then price opened there. So this is actually a gap. So price gapped down and opened here. Instead of opening around this level, it's actually gapped down and opened here and then continued up. Okay, so these levels are still in place. So what happens in the next day? We have price. Okay, so now you can see that price on this next day came back and used this high as support. Okay, so price tested this high as support and then continued doing what, going higher. So now this level is no longer valid because price have already tested it. It have already come back to it and used it to propel itself up. So this level is no longer valid. We delete that level. And then what do we have to the upside is now we have this high because we have a resistance spike here. And then if you play price forward, you can see okay, this low should be there also, this high should be there also. You can see price came back, spiked through this level again. Okay, this other block level of price spiked through that and still close above. All these levels are still intact. We mark out this low, and then I know before this particular day you should have this daily low in your chart as well. And now you can see that price has broken through that, so we delete this low. And what happened? Price spike through these areas, and the next candle it's considered up again. Okay, so you can see how these areas are holding price. Okay, how these areas are holding price. These areas are holding price in. Right? Yeah. So that's actually how I trade these levels. So I believe that you understand each one of these levels and how they actually function. Okay. So I also give illustrations of every one of these levels here. Okay, every one of these levels I give the price illustration on how price have reacted to those levels in the past here. Okay, so we still have one last candle. So we have the breaker volume candle. Okay, the breaker volume candle is also a very significant area of significant candle of where we look for points of interest as well. So let's go to the chart and see some examples of this particular pattern. Okay. So here, what do we have here? What we have here is, if I can just delete all these things. Let me delete all these things first. Okay. So looking for some examples here. So the breaker volume is let's see example. We have this particular low here. Okay, we have this low here. Okay, this is a major low. Okay, because price has been coming down, and then price made this low and reversed. Okay, for price to make this particular low and reverse from here, there is a lot of money below this particular candle. Okay, let me just delete this. Okay, there is a lot of money. I need something to mark out this low. Okay, yeah, nice. So this particular low here that price made before reversing. Okay, this is a very big reversal. Okay, this low is actually called a swing low. Okay, this is actually called a swing low. So this swing low is formed when you have a low here. Okay, you have a low and you have a higher low by each side of it. So you can see there is a higher low here and also there is a higher low here. So this makes this pattern here a swing low. Okay, so another swing low we have is here. We have this low and we have a higher low here. This is a swing low as well, but then the swing low got broken. We have swing low and swing high. So swing low are the one which formed before price turned from bearish to bullish, and then a swing high are the ones that formed before price turned from bullish to bearish. So for this one here, we have a swing high here. So you have this high and then we have a lower high here. So a lower high means that this particular, all this high here and this high here are actually lower than this one. Okay, this make this one a swing high. And also here we have another swing high. So we have this high, we have lower high here, and you can see that the price was going up and then it formed this swing high here, and then price reversed. Okay, so let's say for example price is going down, it's retraced a bit from this swing higher, which has lower high, and it's continued down. Right. So for what we are talking about, the volume breaker, the breaker candle. So what we're looking for is a low. It must not, it must not be a swing high or swing low. So as long as it's a major high or a major low, and then we have price break through that major high or major low. Okay, so let's say for example this swing low, because it's a very good example here. So this swing low, so if you can mark out that low, the lowest point of that, and then we have price coming down, and price broke through this low. So you can see that price broke through this low. Okay, so price breaking this through this low is an indication that this could be a point of interest, but then it's not going to be a point of interest because price just broke through that low. Okay, we need other factors to confirm that this candle here is actually a breaker candle, a volume breaker candle. Okay, so then this candle now is actually a volume breaker candle because it's missed some requirements. And what are those requirements is that when price breaks through a previous high or previous low, the following candle doesn't fill the gap. Okay, it doesn't fill the price gap. So what is price gap? Okay, so they're saying this is another I won't say it's another topic or so. It's just another time you need to get used to. So I think it's very good. It's going to be very easy for you to get used to it because you're not doing a lot of work trying to figure them out. So price gap is, let's say for example, you see this candle move down, okay, and then the next candle follows through and go and move down. So you can see the lowest point of this candle, and then this candle came in and closed. The next candle here closes. It's like the gap. The next candle here meets the lowest point of this candle, so there's no gap between the low of this candle and the high of this candle. Okay, so the gap is closed. Also, you can see the next one, this low of this candle, and you have another candle here, and then you can see where the high of this candle is. So the gap is filled here. So this candle is closed. So price, it means that okay, so what this means is that price is balanced. Okay, there is balance in price here. So both buyers and sellers are being offered. Okay, but so both buyers and sellers are in the market. Price is being offered respectively to both sides. But then, for example, let's say for example, you can see how price moved here. You can see this candle here. We have this low, and price moved aggressively here, and then this candle's high could not get close. Okay, this candle side could not get close and close the gap between here and here. So once this thing happens, so you should be looking out for this. Once this thing happens here, this is a gap. Okay, this is the price gap here, and the area between this high and this low, this here is called a fair value gap. Okay, this is called the fair value gap. So how did this happen? This thing happened here because a lot of selling came into the markets, and okay, let's say for example there are 100 sellers that came into this market, and there were actually at this point in time when this thing happened. So you have this candle, when this candle happened and then this candle happened, there were very little buyers in the market, very little to no buyers in the market to actually balance this price. So this price is not balanced. So what is actually expected in this sort of situation is that price will after, let's say from anywhere between this candle, after this one, price will trade back into this area, fill this gap. Okay, so price will enter and fill this gap and make sure that this gap is covered before you start selling, or it comes back to this area, fill this gap, and then continue going up. But either way, it should come in and fill this gap, because this is still open. You should come in and fill it. Okay, so excuse me. So then, what signifies that this gap is valid to us to take a trade from? Because you can see this gap everywhere. So you can see it's here and here. Okay, you can see this gap here and here, and price came back. Okay, it came back in this candle and filled this. So once price has traded above this high, so let's say if this thing is going down, and if price is going down and this thing happens, once price trades above this high, the gap has already been filled. It doesn't need to totally fill it before it becomes filled. Once price trades above this, it has been filled. So it means our price is coming back to collect some money here and here. It's either coming to collect money here and consider down, or it will collect money from here and here to consider down, or the price will just blast through it. So you can see it's actually came into this area, rejected and considered down, and then the next day it just blew through that level. And then you can see it's the same thing happened from here and here again, and you can see price came in, retest, and came in and tapped this this particular low. Once it tapped it, it's continued higher, and then later price actually took the whole thing out and filled it. Okay, so these things happen often, but then the question is, which area are we looking to see this thing as a valid area to take our trades? Okay, so the areas we're looking for is when price breaks a major low, a major high, and does this thing. Okay, if it does this thing when it breaks a major low, which is this, you can see it here and also see it here. If it does this thing, that's when we are going to be interested in this area and this area for us to look to sell or look to buy in these two areas. Okay, I hope I'm making myself clear. So for example, you have price going up. Okay, price went up, and then we have this low. Price made this low. So this is actually a swing low, because we have this low here, and this low is higher, and this low is higher. So this is a swing low, and like you can see the price broke through this particular low and then left the gap here and here. So now we mark this area and this area out, and these two areas now, this one and this one becomes they become our area of interest. All right, they become our area of interest, where we are looking for price to come in to tell us if we can buy from this area or sell from this area, right? So I hope you understand me. So here, so let's use it as an example, because it's actually worked out perfectly here. So you can see price broke through that low and left the gap here and here. So you're going to confirm if price left this gap after the next candle. Okay, so after this break, so let's say this thing happened, so price broke through this and closed. It's not confirmed yet if there is a gap here, because the next day can still open and close this gap and continue. Okay, so until this thing happens, and then you can see the gap between here and here, that's when this area and this area becomes valid. So you mark out those highs and then look for price to come into this area to give either a buy or sell signal, or to come into this area and give either a buy or sell signal. So if I can play on, so you can see that price came in, tapped into that, went above this high, closed below, and then what happened? Price just continued going down. Okay, continue going down. And also this one here, so you can see this low, price went up and then price broke through that low. You can see the gap here and here. Okay, that's also valid. You are going to wait for price to either come anywhere between this and this to tell you if you are going to sell or if you are going to buy, and then price didn't actually come close to it. So it might or it might not come to it, but you have to be ready for it when price comes to that area for it to make your decision. Okay, so I hope that is understood. So you will need to go to your own chart and then practice this so you can stick to your mind, right? So I've explained these three on how to mark out areas of interest. Okay, so what we are looking for here, what we just studied here, is how to mark out your so how to mark out your areas of interest. So where to mark out your areas of interest. So anywhere you see any of this happening, that signifies that you have an area of interest where you're waiting for price to come in and tell you, are we buying or are we selling? All right. So yeah, I think this video is getting long and I'm actually getting a bit tired. So by tomorrow, I think tomorrow I will record another video explaining what we are going to be looking at that particular area to tell us if you're going to sell or if you're going to buy. So that's what I explained here. So tomorrow we're going to be looking at this particular one. Okay, right? So I will go ahead and record that video later on. Alright, so study this, and when you watch this video, also go to your chart and look for examples where those things happened and take notes so it will stick to your memory. Okay, what I'm showing you here is actually how I trade. Okay, it's actually how I trade on a day-to-day basis, right? So I'll be waiting for your updates and questions and answer. Okay, for your questions, so I can answer them whenever you ask them. So please make sure to go over this whole thing and understand the concept. So I explained each and every one of these POIs here. Okay, you can see the explanations here. I explained them. All right. So yeah.